At least nimeona hadi
just a minute.
okay, haina shida. Nimeshaanza recording. I've clicked my end. Yeah, sinaona recording has started.
Yeah.
Yes.
So let's start off.
Uh-huh.
Just a minute kidogo tu.
Okay.
So you can see my screen, yeah?
Yes, Volume Academy.
Yeah.
Yes.
So let's begin. Sorry about the morning delay. Morning niliona, you see in that time, niliona it was around 4:30. Hello?
Hello, nakusikia vizuri.
I think it was around 4:30 na we had planned on 4.
4, yes.
Yeah, so let's start.
Okay, ni sawa. So we'll be having meetings in the evening.
Yeah, most probably in the evening from 4 to 5.
4 to 5 from Monday to Wednesday.
Yes, from Monday to Wednesday.
For Monday, is it possible we have it in the morning? Unaweza jaribu Monday today at least, sijakuwa hivyo nini. Kuna another commitment but haija happen, so I was flexible hii time. For Tuesday and Wednesday it's okay from 4 to 5.
Okay.
Monday ndio can we do, unaweza jaribu Monday, tunasema Monday at least hiyo 4 to 5.
Yeah, we can do the Monday 4 to 5.
Okay.
Or alternatively, we can do maybe Tuesday to Thursday.
Okay, ni sawa.
Sawa.
Okay. Yeah, that's okay.
So you're going to, this is what you're going to be learning. All of these, what is Forex, who are the participants, the sessions, what is the buy, what is a sell, what is a pip, what is a lot size, types of orders, types of analysis, types of traders, what is a stop loss, and what is a trade.
Okay.
Yeah, you're going to learn, this is just the basic. The basic is to help you at least gold 20 pips sell or gold 100 pips buy, you're going to know what you're talking about.
Yes.
Lakini inaanza kuulizwa tena na hii kitu una calculate pips aje, or where should I place my TP or stop loss?
Okay.
Yeah, because sometimes unaweza weka stop loss of 1 pip, literally 1 pip, alafu in the next minute usikie ni umetolewa out of the trade, then you are about, unasema you are out. Nikisema TP hit ama we secure our profits, you are out. Yeah, it happens to me. It happened to me a lot.
Okay.
And you're entering a trade without the knowledge, as in haujui kwenye pips ziko. So by the time you realize you've a mess. You're supposed to put in a 0.01. Yeah, I think it's there. The lot size you're supposed to put in a 0.01. Unajipata you've put in maybe a 0.1. Then you're like, why is my $100 account in a washa red? Pale kwa margin call.
Okay.
Yeah. So let's start off. So basically, Forex is simply the exchange of currency from one bank to another, or one person. Maybe, for example, let's say you want to go to the bank. You want to go to the bank and you want to buy the dollar, or you have the Kenyan shillings. You want the dollar. If you have the Kenyan shilling and you want to buy the dollar, you're going to buy the dollar. There are those exchange rates that are displayed on the screen. Maybe you're going to buy the dollar. Maybe you're going to buy the dollar at 125. Right now it's at 125.56. Yeah, you're going to buy it at 125.56. If you have dollars, same case. Now you're going to sell the bank. You're going to sell to the bank your dollars. So the bank maybe will have an exchange, but the banks are usually the exchange rates are not good, but the exchange rate is at one. Okay, I don't know what the bank rate is, but it's quite low. Maybe it's around 119, 120, but because these other rates are around 121.8. That is the best.
So the banks is different from
Yeah, so the bank you might find it's maybe around 118, 118, 119. They have terrible, and you might find when you're buying dollars from them, it's around 127.
so bank may say advisable if you want to exchange.
Yeah, I would prefer you go to a local bureau, at least those ones. Okay, for the bank, it's assured see your fake notes, but if you go to these bureaus, some of them might call you, kama uko careful. You might find that you umeenda hapo na 120,000 or 125, anakwambia to give you $1,000. Then you find half of that money is fake.
So at least
let's
bank uko na hiyo security.
Yeah, I think when I was making this, because this is a presentation, I think last year it was at 107. Yeah, the exchange rate was at 107.58.
Okay.
Now you can see it's at now 120. If you're buying dollars, it's at 125.5. You see how inflation has also played a part.
Yes.
Okay, who are the participants? Majorly Forex trading was not initiated for the little. Okay, I will not say the little, but it was not meant for the retailer, because we are at the bottom. As traders, we are at the bottom of the chain, because it was initially, or even right now, it is meant for big companies. Mostly it is meant for banks, whereby maybe a certain bank which has shortage of US dollars, maybe the Bank of Japan has a shortage of US dollars. Maybe they want to make some transactions. Maybe there are some of their clients who want to purchase land in some other place. They will do what? They'll buy the dollar. That is how you will find that the market is moving. Mostly it is exchange between the big players are banks. The second one is companies, big companies. Let's say Apple. Apple, maybe they want to, for example, they released their new products this September. Maybe you realize that maybe at around March, April is when they were shipping parts. They were shipping parts from China, Japan, or most of the phone parts are made in maybe Japan or China or South Korea. Maybe you realize something that whenever they want to do something, or whenever they want to pay their manufacturers, they'll pay in US dollars, or they convert it to their local, those each and every country irrespective, maybe in Japan, watalipa in maybe yen. Yeah. So you realize that large transaction is usually, that is what is called foreign exchange. Then we come to hedge funds. Hedge funds these are big companies whereby it's a pool of funds. I know you have an idea of what a hedge fund is. It's a pool of funds whereby maybe the investors want to invest in different types of commodities. Maybe they want to invest in coffee, they want to invest in stocks, they want to invest in the Forex market, they want to invest in futures, they want to invest in most metals. They want to invest in special metals like gold and silver or oil. So you realize that this group of individuals, or this group of investors, they form in like a fund. It's like a circle. Literally it's like a circle. In layman's terms, it's like a circle whereby they'll be able to make these large purchases, or they'll be able to invest. Maybe because, for example, you realize that maybe right now buying a stock the most common stock is the Dow Jones. The Dow Jones right now is trading at around $30,000. So as an investor, if you don't have maybe that amount to trade one share or to buy one share, you can have a pool of funds whereby you can buy 100 shares. If 100 shares, for example, you bought in at $30,000. Whenever they go maybe up to around, they can short, they can buy, they can go long, they can go short. Whenever they buy maybe this type of stock, whenever maybe for example they say are going long, they are projecting maybe the Dow Jones will go up to around 40,000. That's around 10,000 USD in profit. So when you buy in volume, you get good returns. And there is a bottom of the pile, but we are still steadily growing. Tunaendelea tukigrow. These are the retail traders. The retail traders right now, they are taking up their space. It's significant, maybe over the last like five years or so. You realize that the retail traders have really grown because the introduction of brokers, the regulation of them, the introduction of leverage margin, whereby you can trade with as little as $100, as little as $50, because in the past, maybe the last 2000, 1997, maybe minimum you could trade with is around $50,000, and not many people are on such amount, and the leverage then was very low. But now, due to advancement in technology, we are able to, due to the advancement in technology, we are able to utilize something called leverage, of which you're going to come to that one. Then let's go to the next slide. Forex sessions, we have four. You have 4 Forex sessions, but these are the main ones. There are others, maybe they are around six or so, but I don't concentrate on the 6 of them. The major ones are 4. There is a Sydney, there is a Tokyo, there is a London, and there is a New York. Okay, Sydney session starts at 10 p.m. and it goes all the way up to 7 a.m. Sydney session starts at around 10 p.m. It goes all the way up to 7 a.m. The next session starts at 12, at around 12, the Tokyo 12 a.m. up to around 9, up to around 9 a.m. in the morning. Then from there you have the London session. The London session starts at around 8 a.m. 8 a.m. all the way to 3 p.m. Then we have the New York session. It starts at around 1 p.m. It goes all the way to 9 p.m. So you realize all these are different sessions. Maybe there are other new sessions which have come, but the best time, these are the major sessions that you should be focusing on. Whether you're a night person, whether you're a morning person, whether you're a lunchtime person, Forex is able to integrate all these time zones. You're able to benefit because you can trade at any time of the day and still make your money. But the best times the best time to trade Forex is during volatility. What do I mean by this? Overlaps, session overlaps. You realize something. For example, whenever a session is ending and another one, most of the good volatility, you will find it here, or here. The session overlaps because, upon this where you'll find most, and you can see it's indicated here, most of the highest volume is here. The most volatile session is the overlap between the London session and the New York session. That is where the market will take the direction. Maybe here it was just forming up, it was just preparing, but here is where you will see. Right now it's at around 4. At around 4, let me show you something. Let me share something on the screen. Let me share something on the screen. Let me share. Okay. Share, okay. Let me stop sharing. Kidogo. Just a minute. I want to share chat. You realize something. Okay, I don't want to go over, or I don't want to go overboard, but I just want you to see this is where the reaction you start seeing. This is where you see how the market, the direction that it is taking. You see, for example, I had a buy at around this area here. It came all the way down. It has gone all the way up. You see, but let's wait for at around 435 is when the US market, because mostly I trade for the US market, you see a lot of action taking place. Then let me go back to my screen. Let me stop sharing this. Let me share again. Let me share something. Let me go back to a presentation. So that is from the current one. So that is Forex sessions for you. Okay,
Just a question.
Okay.
Hii unaona naona iko under UTC time.
Yes.
So this is not our Kenyan time.
No, this one is our Kenyan time.
Oh, ni hapo juu vile umeandika UTC time.
Oh, sorry.
Nikashindwa because Kenyan ni East Africa EAT.
Yeah, East African time, but most of the sessions. Most of the sessions. Okay, the most important. Okay, I'll urge you to concentrate on the most important session, the London session,
and
the New York session, because what I'm trading, the method that I'll teach you to trade, the volatility or the direction of the market will happen at the London session. Because if you choose to trade, maybe if you choose to trade AUD pairs, Aussie pairs, okay, most of them, they do not, okay, they'll move during the New York session, but most of them will move during the Sydney session.
Okay.
You get?
Yeah.
If you are a fan of yen, if you are a fan of anything to do with yen, they'll move mostly during the Tokyo session. If you are a fan of pound, euro, Swiss franc, all of them, they'll move during the London session. If you are a fan of the US dollar, the Canadian dollar, you are a fan of the two, they move during the New York session.
Okay.
Yeah.
Sorry for that. So the most kulingana na what you have told me hizo pairs zile ambayo kuna a lot of volatility is the London and New York session, especially the overlap.
Yeah, the overlap, because right now you realize something, but the method that I'll be teaching you, it's applicable to anything. You can literally you can take anything. Can you hear me?
Yes, you're audible.
Yeah, you can. The method that is so okay. I'll not say it's simple, but it's straightforward. You can, whatever you choose to trade. You know, there are people who can choose to trade lesser volatile pairs. There are people who can choose to trade higher volatile pairs. You get. Now it depends on, up to you, your risk management, your risk appetite. So you're going to dive in. You realize something. I'm not going to. There's a lot of theory behind. A lot of theory behind the introduction part of it, and sometimes it can be quite stressful or boring. So, but I want to make session as interesting as possible. So you're going to dive into right into the charts. So you're going to, what is a buy? Whenever I'm telling you maybe a certain pair is buying, what do I mean by that? In Forex, there are two pairs. Sorry for that. In Forex, there are two pairs that are traded. Maybe, for example, the pound dollar or the euro dollar or the dollar yen. This is what happens. For example, in a similar scenario of pound dollar, let's say pound dollar is trading at around 140, but this I think was a long time ago. Let's say it's trading at around no, this is pound. I think I made a mistake here. This is pound yen. There's a time it was trading at 140.70. Whenever the pound, for example, whenever pound yen goes up to 141.00, the market has gone up. I'm assuming this is not the same chart as, maybe prices are different, but price was here. Let me use this one, the Wall Street Dow Jones. I'm going to use Dow Jones, for example. The Dow Jones was trading at around 26,100.1. This is a long time ago, and it has come back to these levels. So what happens is that whenever it goes up, price will increase. It increases in number. You'll see it now at, for example, when it goes to this upper line here, it's at around 26,818. Whenever you make a difference between 26,818.9 minus 26,100, what has the market? What is the difference in that? It's around 718.9 points. Now you realize something. If you watch news, maybe financial news, you realize something. Maybe they'll have a conclusion of the whole day. They'll say the Dow, mostly the Dow is famous. The Dow has gone up by 400 points. The Dow is down by 500 points. The Dow is down 2 hours in by 400 points. This is what they mean. Whenever the price goes up, whenever the price increases, that is what is called a buy. That is a similar scenario for a buy, and you're going to dive in. You're going to have those two similar scenarios, a buy and a sell, and I'm going to show it live in the charts. For example, let's go to the next one. What is a sell? The sell is the reverse of a buy. For example, you realize something. The same chart, the Dow Jones. This was the initial point, but I'll show it live in a chart so that at least you do not miss out, or you start asking what is this. For example, the Dow was at one particular point in time was at 26,100.1. It lost value. And another thing I forgot to mention is that in Forex you can make money both ways. It's not like shares, whereby if KQ shares they lose value, I lose my money. No, in Forex you can make money both ways. Whether it's going down, whether it's going up, you don't care. You can make money either way. So 26,100.1 level, it came all the way to 25,558. When you do this math, it's around 600 and something points, roughly. It's not the actual estimate, but it's around, it went down by 600 points. You realize that maybe they were making financial news. You realize they say the Dow is down 600 points today. Tomorrow the Dow is up 1,000 points. You'll be like, what do these people mean? In real sense, they are just telling you the Dow today has sold, or the Dow today has bought. Yeah. Okay, let's go to the chart. Just give me just a moment. Okay, it will take me, I think, maybe some time, but I think I'm good. I'm seeing. Let me stop sharing. Let me share again. Yeah, I really love using charts. So you realize something. I'll just have one pair. That one. Pound dollar. Whenever, okay, for pound dollar, pound yen, euro yen, dollar yen, they are quoted. There is a base currency. I forgot to mention that, but I'll come to that. There's a base currency, and the quote currency, but those ones are in the types of currencies. I'll come to that one later on. But now, let's see. We are looking at an example of a buy and a sell. Just a minute. Looking at an example, let me just type in a random chart. Pound. Let me look at AUD, USD, so that at least you can have a clean chart, so that you can see what I'm looking at. This is Aussie or Kiwi dollar and US dollar. I want us to see an example of a sell. Whenever the price is selling, just give me a minute. Just a minute. No, it's not there. Yeah. Whenever the price is selling, you realize something. I have marked. I want you to realize something. The price was here it started at 0.7171386. It went all the way down to 0.68232. That's around, okay, you're going to do the difference. Let me show you how you're going to do that. It started at around 0.7, let me check that again, 0.7135, went 35, it went all the way down to 0.6859, 0.6859. The market lost value. You see, initially it was at 0.7135. It went all the way up to 0.6859. What does this one mean? The market lost value. It sold. That is what you mean. You simply mean by sorry, let me zoom it in. This is what you mean by a sell, because you're looking at this area. You're looking at this area here. That is the price level. It was here, then it went all the way down here. Then I want us to look at a scenario of a buy. A buy, the market started all the way down here. It bought up here. What was the price down here? 0.6666864. It went up to 0.71385. What did the market do? It gained value. Okay, the market bought, but in real sense, what happens is that for example, whenever you're trading, whenever you're trading two currency pairs, this is what it means simply. It means that, for example, if the Aussie dollar is buying, it means that the US dollar is weak. That is why the graph is going. That is why price is moving up. I don't know if I've confused you. If the Aussie dollar is buying, it means that the Aussie dollar, whenever the Aussie dollar is, let me call it the Kiwi dollar, whenever the Kiwi dollar is stronger than the US dollar, it means that the US dollar is weak. That's why the graph is going up, because whenever the graph is going up, it means that the Aussie dollar it is stronger at that particular moment of time compared to the US dollar. The reverse of that happens. The reverse of that is whenever you see the graph is going down, whenever the graph is going down, losing value, this is an indication that the US dollar or the US economy or the US dollar at that particular moment of time or for a period of time, you can see for this period of time, the dollar has been very, very, very strong. That's why you can see even in our exchange rates. That's why previously it was at 120. Previously, when you had US dollars, you are like, I think it was around last week when I was withdrawing, it was around 121.6. Right now, it went to 121.7. It is now at 121 point, I think at around 121.8. You see, when you compare it, I'm not comparing it with the Kenyan shilling, but this is what happens in reality. That is what we mean by a buy or a sell. Okay.
I have a question.
Yes.
I have gotten the concept of the buy and sell. Is it the same? Is the difference now because I usually hear people saying buy price, sell price. Is it the same or that is a totally different thing?
Okay, yeah, it's different in a way because you realize I'll talk about buy limit, sell limit, buy limit price, or okay, let me just give me a minute. Let me show you something. Okay, they are what are called market orders. No, you're talking about buy market price, sell market price. Those are market terms. Those are market orders and they occur differently. Okay, but the basic terms, there's a difference between the market. Okay, there's no particular difference, it's just a change of terms. You use it in a maybe use it in a certain way. But what I can tell you, okay, another term they use is that today we went long. Today, okay, you realize sasa ule mtu anataka kushtua in forex. Today I've gone long 300 pips. That basically means that he has bought. Long means buying, short means selling. And these are the terms. Maybe if you have seen there's a good Netflix film. I'll share with you the name. I don't remember the name right now, but I'll share with you. It's called, I think it's called The Big Short. So somebody might ask, what's the big short or what's shorting? Shorting in simple terms is selling. Or another term they use is the bulls and the bears. The bulls and the bears. Basically, the bulls means buying. You can either do bulls. Let me just write it down for you. Bull, long, going long, or buy. Because these are the main terms you'll see in the market. Sana you will see the most common ones are most common ones are going long or going short, or the bears. Then this is or short, or okay, let me put them in a different way so that at least zinakaa different. Yep, there it is. So that is what it means by people will use these kind of terms. Don't get afraid, it just simply means buying or selling. Okay?
Yes, noted. So, but there's a term for this nimelewa bull or going long or buy, it's the same. And bears, bearish short is a sell. When they add the term buy price, or that is a different thing, buy price, sell price.
Yeah, okay, when they add something like buy price, sell price, It means, okay, I don't want to dive into market orders because we'll come to that whenever you're putting in trades. But whenever they say about buy price, it means that the market will buy at a particular price. Okay, the market is going to go, maybe it was going down, but the market will buy at a particular place in future. Those are called market, mostly those are market orders, and I'll talk about them. There are so many of them, but the most important ones are either you do a market execution, which is either you buy or you sell instant, or what you do is that you put in limits, because limits I can associate them with. It's the same term when I say buy market price or sell market price. That is in the market orders, different types of orders.
Noted, ni sawa, tutafika hapo.
Yeah,
But
it's just I want to take you slow, but I don't want to overload. I don't want to put in all the information at once, but it's good you're asking.
Okay.
At least now you know where the category is.
Yes.
Let me share back my slide. So that is basically what you mean by buying and selling. The next one, I think this one is going to take us this one, just a minute. Yeah, I think for today's lesson, let me stop at there, because whenever I dive into the what is a pip, what is a pip, what is a lot size, types of market, that is where you're going to learn it tomorrow, because I don't want to, because pips is an engaging lesson. I'll say it's an engaging lesson because you're going to do some maths, and it's going to be a little bit different than the usual introduction. So for today, we're going to leave it at that particular point. I hope you have understood. In case you have any questions, let me put this time for the next, I think, around 12 minutes. In case you have any question, just ask me. Now is the time.
Okay, I think the concept zile vitu tumepitia, I have understood in regards to what you have talked about, the buy, the sell, the participants of Forex and the different Forex sessions. At least you answered my question in regards to the time zone, the graph that you had shown in, I think it was slide 2 or 3. The time indicated there are according to Kenyan time, the East African time. Though.
Okay, what you can do. Okay, I don't want to hammer it into you, because I don't know, because you see, after you're done with maybe the course, you realize something. You see, maybe you're not a patient person, or maybe you're a patient person. You can be okay, but that one, the different types of traders and your level of risk. Because for me, I know automatically if I'm confused, because before, what I used to do is that if I trade pound pairs, this is what I used to do. Let me just share my trading view screen again. What I used to do is that, let me exit that one. Okay, don't know why. Okay. What I used to do is that, for me, for example, right now, what am I trading? I'm trading in dollar pairs. So what I used to do is that there's a setting here. I just put in the, just a minute. I just put in the New York. If I put in the New York, I'll know, like right now it's 9 a.m. in US. Right now it's 9 a.m. Right now it's 9 a.m. When I'm trading, I'll know that the market is will be volatile between 9 a.m., 9:30, 10, 11 a.m. US time. If I'm trading London time, I'll just come here. I don't know why. Okay, I just come here, put in London. London session, I'll just know. For example, right now it's at around, it's 4, no, it's 2. It's supposed to be 2. Yeah, it's 2 p.m. at London, 2:37. Now with this knowledge, it will help you understand the how your pair behaves. Like right now, London will not be that active. Where was London active? It was active at around, today is 2. Okay, Mondays the market does not essentially move a lot, but let's see pound pairs. It moved. Let me go to it lower time frames. Yeah, you see there was some movement here, but Mondays, I don't like Mondays. Mondays are not good days to trade. Sorry, Mondays are not good days to trade, but I'll come to that particular point. So for me, that is how I used to. For now, I just put in the general one because I can with my local time, I cannot be able to. No, if it's London session, what you do is that if it's London session, it's 2 hours behind. If it's US session, it's like 8 hours behind. Okay.
Yes, noted. Plus, I have seen in this platform, the Trade Viewer, you can change the time to know how the pair you are trading. If it's the dollar, you change it to New York time to at least to know the time zone at that country, so to enable you to make.
Okay.
Mhm.
Okay, I can advise. Can you hear me?
Yes.
Okay, I'll advise that for the time zone session, what you do, let's see. Let me see if you have. Let me see the. I'm forgetting that. Yeah. You can have. You see, for example, you can have something like this. Okay. Okay, if you are like trading, you can have the. For example, right now it's at 9 a.m., 9:39 New York, 2:39 London, 22:10, 39 p.m. Tokyo. If you want to trade, you can just, I'll share with you this link. Copy. I'll just share with you. Let me share with you. I've shared with you, or let me share. Yeah, I've shared with you through WhatsApp. Yeah.
Okay.
But also I learned to share. Okay, maybe 1 or 2 days. I just learned to share it here. Let me see. Yeah, chat. Let me share it here also. Yeah. You can use that. You can use that as a guide. Okay. You do not have to crack your head doing all those maths. Maybe what's the difference? What is this?
Okay.
Yeah. Any other question?
No, as of now, I think I have understood. Sina maswali in regards to what we have learned up to that point.
Okay. If we do not have any other question, I'll stop recording.